iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Yeah, good Saturday morning. Welcome to another edition. Florida Talk Real Estate. 2 hours of infotainment is what we offer up, and we are live on this 13th of September. Thanks for being out there. Whether you're tuning in on the old terrestrial radio, 92.1, 101.7, phenomenal. Thanks for making that decision on a Saturday morning. Maybe you're using the free download, the iHeartRadio app. That is free and makes us worldwide, ginormous. I know. If you're tuning in from pockets of the earth, thank you for being there on a Saturday morning in South Florida, of course. That's where we are, by the way. And of course, if you don't believe me, you can check out the live streams. Florida Talk Real Estate on Facebook, Florida Talk Real Estate LLC on YouTube. That's home of a ton of informational chunk videos. We live stream on a Saturday as well. You can join us. Thanks for being there. And if you're not there yet, always remember you can tune in whenever you'd like. And as well, you can be a part of the program, toll free, 877-927-6969. Dial it up. If you got a question, comment, concern in the world of real estate, if you'd like to be a part of the conversation at hand, don't be shy. Dial on in. The first voice you'll hear, the melodious tones of our producer extraordinaire. There's my brother from another mother. Jimothy, how the hell are you?
Doing mighty fine. Good morning, gentlemen. Happy to be here on a Saturday.
Always good to see you, dude.
Good to see you too, bud.
And yeah, Saturday is carved off for a little bit of this and a little bit of that. Like Jimmy over there, your boy, that's me, your air traffic control, Johnny C, your old buddy, your old pal. Let's get to the very important people, the most important stuff, like Mike Rauch. He's the mortgage guy from the mortgage firm. He's brought all kinds of important details today. How are you, my friend?
I was fine. Now I'm nervous.
Oh, no.
I didn't realize I was supposed to have all this information.
Oh, I thought it was because we're on the radio.
Oh, like I should have some content.
Yeah, now I'm
this
nervous.
Professional real estate.
Yeah,
show.
You're loaded with content. We're ready to go.
Yeah, thank you.
Yeah,
thank you. That's a nice compliment, I think.
Always nice to see you.
Well,
or it's just loaded.
Loaded.
Full of something.
And content.
Full of something. Well, good morning.
Always a pleasure, my friend.
Yeah, of course.
And let's say good morning to our fearless leader now. 13 plus years now, I've told you that he runs a top producing Keller Williams team, the Florida Home Pros team at Keller Williams Innovations. You'll find Jimmy D. There's Jim DePola. Jimmy D, how you be?
Hey, everybody. I'm doing very well, Johnny. Thank you so much. Happy South Florida, everybody. Nice cloudy day out.
I had sunshine on my way.
Yeah, did you?
You did?
I
Had a lot
don't
of-
expect it to last very long.
I don't know if I do. Yeah.
Had a lot of thunderheads up over on the East Coast.
It's what I love about Florida. You look out, you're like, oh, it's nice. And you're like, your neighbor's like, no, it's not.
Yeah, exactly.
Yeah, sucks,
Pretty much.
actually. It's a monsoon
No,
right
the
now.
best part is it was like summer hot and it's like, oh my God, when's this heat gonna end? And then now it's raining every day. When's this rain gonna end?
Yeah, it is a cycle, isn't it? We do have a nice little little cooling trend, I guess, right now. A little push through.
It is
Yeah.
it has been a little cooler.
Easy for me to say. I work inside. So.
Yeah, but if you take the opposite attitude, Mike, that you enjoy the hot weather and you enjoy the humidity, then you're happy most of the time about that stuff instead of complaining about it.
Well,
I mean, listen,
if you live in Florida, you have to enjoy the heat to some extent, don't you? I mean, I'd like to.
I don't know if it's like this for everybody, but maybe it's just my body type. But I'll walk outside. I'll be sweating in 3 minutes.
Oh, for sure. You make it 3 minutes dry?
Exactly.
Good for you.
I'll be doing nothing, like the barest amount of physical exertion, and it's like my shirt is so through.
He blinks.
Yeah, but just blinking. I'm walking at a normal pace.
So you know what's weird? I don't know why. I do enjoy the heat, but for some reason, when if I have my wife and my daughter in the car, as soon as you turn the ignition on, they're like, push the air. They want it now.
Oh, yeah,
right?
Yeah. My dad was like that.
All right. I'm a windows down, music up kind of guy.
Yeah.
I don't run the AC. So I just going from place to place, I will work up a sweat just because I don't know why.
You're used to it, though.
I like it.
It's fresh air. Well, I mean, as fresh as it is around here, but still, I used to be the same way. I love driving around with the windows open.
Can I ask you guys a question? Were you both smokers at one point?
At one point, yeah.
And I know you were. I was too, and I was a window down guy too. I bet you it's partly that.
So I've maybe I've transitioned into it. My first handful of years in Florida, I was straight turn that air on as soon as you can. I don't know what's happened, but I've in the last 15 years, I'm straight all windows down, make that music as loud as it can be because I'm deaf, and let's go.
Have you always showered every day, or was there like a time in your past when you wouldn't shower, and so the windows being down would be helpful for that?
If I'm trying to apply, Mike.
Exactly, it would be very helpful.
Do I stink?
Yeah, if I'm not taking a shower, I mean, I'm camping or something, Yeah.
There was a pretty famous movie that was filmed partially here in Lake Worth called Body Heat. I don't know if you remember that with Kathleen Turner.
Yeah.
And Kevin Kline, not Kevin Kline. I can't remember the guy from The Big Chill. One of the guys from The Big Chill. That's another blast.
There's a lot of people in The Big Chill.
Yeah, right? I know, but it's the guy that I think. No, he wasn't the dead guy. I thought he was the guy in the casket. He wasn't the dead guy.
Body Heat, you said?
Guy? Yeah, Body Heat.
Yeah.
Kathleen Turner. I can't remember, but anyway, that whole thing was filmed about this corrupt attorney and this lady trying to kill somebody and set up somebody for murder. But it was set here in Florida, and it was like older Florida. And there was no air conditioning, so throughout the whole movie, everybody's sweating and wiping their brow. And
they got all the jealousy
fans
windows
on, and they had the fans on and everything, to keep it going. And to me, that was so exemplary. Just Florida, right? The weather. And when I was a kid, I was like, that's where I want to stay. It's something like that. I really, really enjoyed the heat. I like the heat.
Right.
But I got to tell you, the last 3 years, and I'm sure it's because I'm getting older, sometimes it's like I don't want that heat anymore.
Yeah.
Yeah, it's pretty wild.
Well, we change. What did you find there, Jimothy? Body Heat.
As far as the stars, William Hurt, Kathleen Turner.
Yeah. It was
Mickey
William
Rourke.
Hurt.
Ted Danson was in that too.
Ted Danson.
Yeah, they had a pretty good cast in that. And they filmed a lot of it at this bar in downtown Lake Worth. I don't know if it's still there anymore. It's a pretty cool movie. If you want. It's film noir, so it's a crime like film noir movie. So
I still see Ted Danson in brand new commercials. I can't tell you what the commercials are, but I just saw him in one.
He has a hit TV show. He has another hit TV show.
Wow. Is he really?
Yeah.
I don't know anything on network.
He just did. It's like Netflix or Paramount Plus or something. But I just watched it. You ever hear Only Murders in the Building? It's like with Martin Short. And
yeah.
It's the same exact thing, but
he's also been on. He was on Curb Your Enthusiasm as a regular.
Well, that's gone.
Character. No, but he was on it.
Yeah, he was. Yeah, and he had other series. That guy has had so many series, and they last. His series don't get canceled in like a year.
Ted Danson's awesome.
He's got that one. He's got that one that he can lean on pretty heavy.
Which one's that?
Cheers.
I know. I'm teasing that. Yeah, it's like
we call that the moneymaker.
Right? Yeah, the moneymaker. Yeah, exactly. Yeah. Well, anyway,
he's aged well too. I mean, he's just silver, but he's not one of those ones you're like, what'd you do, man? That's way too much surgery.
Yeah,
like, you don't even look like yourself anymore.
Yeah,
he's Ted Danson.
Yep, exactly. So, we got a lot to talk about today. One of the things I want to talk about is I think I started talking about this in 2018. So, broken clock is right twice a day. They're talking about stagflation coming, right? So I saw a headline: "Is this the whiff of stagflation?"
Well, you're starting to get a little increase in unemployment claims, so
a little bit more of inflation.
This is the time to get ahead of it and be like, "Aha! Here it comes."
A little bit of inflation, a little bit of unemployment, and all of a sudden you're getting this concoction to create not a good thing. Really good news: the interest rates have dropped very significantly this week, Mike. I mean, it isn't going to make or break your budget, but that's the biggest drop we've had in quite a while. So we're going to talk about that.
Yep, went from 6.5 to 6.35
in one week. That's 0.15 is a big drop for 1 week.
Gotta love the downward pressure though. Just keep it going.
Yeah. So the interest rates,
push it down, way down.
We're also going to talk about
like all my feelings,
exactly,
like you have them.
I also thought it would be kind of smart to talk about economics 101 and how it relates to real estate, so you can understand as a buyer or seller or refire, right? Something like that, of like what should happen in the market. I was talking to a guy yesterday who's buying a home, and he said his first time home buyer, and he's like, yeah, I'm going to buy this house, and I think his rate's going to be like 5.6. And he goes, yeah, so I'm going to go ahead and buy the house, and then in a year I'll just go ahead and refi, right? And I said, okay. And I'm not his agent. He was calling me from his advice because he's a friend of a friend or whatever, and said, hey, why don't you talk to Jim and find out a couple of things. So I said to him, look, you can't rely on the refi. So if you're buying the house now, expecting the refi to be your affordable budget, be very careful. You got to have the affordable budget now with the current mortgage payment you're in.
Oh, he was saying he more or less will need to refi to relieve some pressure.
He was counting on it almost.
Interesting.
You know what I mean?
And you said 5 point something?
5.6. Yeah, it was a great interest rate, and he was expecting to get even lower than that.
Does he know what the rates are currently?
He's so fresh, brand new. Like his agent didn't explain everything.
Is he probably paying money for that rate?
He might be. Well, I think he's getting a seller credit. Well, it's FHA. Can you do buy down with FHA?
Yeah.
Okay, then
you can't with the DPA program, like the Florida Housing
Program.
Yeah,
I don't think he's in another state, so I don't think they have that.
But I guess the question for me is like, if it costs money to get a lower than normal, what I'll call the par interest rate.
Well, he's getting it from the seller.
Regardless of where it's coming from, it's costing money.
Mm-hmm.
And then if you're refinancing, like there's a break even. So like he should be asking himself, does it make sense to buy down the rate or take that money and do something else with it? He's deciding to take that money that's available to him and buy down the interest rate.
Mm-hmm.
So that's the old, hey, give me $1,000 today, Jim, and I'm going to pay you back $100 a month.
Right.
For the life of the loan.
Right.
So that's, what did I do? 10-month break even. Right. So if you refinance your loan before 10 months, you shouldn't have given me the $1,000 because you never made it back. Right.
So then if you, that's sort of, yeah. Go keep going, Mike.
So then the break even, the simple break even there is like, okay, I'm going to take X amount of money. I'm going to direct it towards buying down my rate. Think of it as like, I don't know, prepaid interest. Right.
Mm-hmm.
But essentially give me money now. I'm going to pay you back incrementally. The longer you allow me to pay you back, the better the choice it was for you, right? You're in the red for a certain amount of months, and then you're in the black. And then the more you're in the black, the better the decision was. So if you're planning on taking money, buying down a rate, and then refinancing within a year, it's probably well within the break-even period. And so he should do something else with the money.
And I explained that. I said, look, a refi in a year, you'd have to have a really significant interest rate drop to want to refinance in a year, or you paid like maybe a non-conforming loan and you were paying way higher than the average interest rate, and then you want to get locked into a regular interest rate, if you will.
Yeah.
But I also explained about the closing costs and how you have to divide how much you're paying to get that refi.
And you also need
divided by the savings.
The other thing is I'm talking to people, obviously this rate talk has got people thinking about refinances, especially if they were, late 2023, a lot of 2024. We're starting to get into this zone where the rate is better than your rate, right? Maybe by a little bit, you start getting toward like one point, right?
Yeah.
So maybe 1.5.
At this point, you're just hoping you got the equity positioning, right?
That's it. That's exactly where I was going, which is
right.
If your home value hasn't increased and you just made your normal payments, so you haven't paid down your principal a lot in the first year or two of the loan, you may not have the equity position that is ideal for refinancing because you end up with a loan. Remember, you're rolling in your costs, right? These costs do exist more or less.
Yeah.
And so has your home value increased enough just naturally over the past 2 years to allow for that refi?
And if you're FHA financing, chances are, or VA financing, chances are, unless we had a really strong appreciation year, that isn't going to happen, right? Because you need 20% equity minimum, right, Mike?
You don't need it if you want to get rid of the mortgage insurance component, right? So one way.
No, I'm talking about if you're trying to do it for interest rate, like the guy was talking about. Let's focus on what the guy was. His intent was buy it now, in a year the interest rates are going to drop and get a lower payment.
Right.
So I know that you can use I know you could do something to rid of the PMI, and that will lower your payment too. But let's just keep it like kind of simple.
Well, but I'm saying you said you need at least 20%. So the answer is no. You can refinance what's called a limited cash out or a no cash out refinance. So let's say I started with an FHA loan, I did it at 3.5% down. Well, if my home value hasn't increased to that 20% equity position, you can still do a limited cash out refinance, meaning you can roll in your closing costs, right? You can't do like debt consolidation, which is what a lot of people think with cash out, but you can basically do a replace one loan with the new loan. But if you don't have the 20% equity position and you're going like say FHA to FHA or VA to VA, whatever it is, or even conventional to conventional, but without 20%, you're still going to have mortgage insurance in your new payment, right? So yeah, you're going to get the lower interest rate, but the other thing that traditionally people look at with refis is getting rid of the MI. So you're still going to have MI in that picture.
And what's MI now? Like 8.85?
No, so MI, it is expressed as a percentage. And the way I like to think about it, I add my 30-year rate to my MI factor, and that's my interest rate. So MI depends on, so we're talking about private mortgage insurance on the conventional side, or in FHA's case is just called mortgage insurance. But FHA's MI, if you're doing the traditional 3.5% down, the low down payment, which most people are doing with FHA, it's 0.55%.
They dropped it. They dropped it twice.
Well, I know they have. Because when I got in, it was like 1.25 or something like that.
1.85. Yeah, it was probably 0.85.
They dropped it to 0.85 at one point.
Mine was
1.35.
It was
something like that.
2.5, I think, is what it was, or maybe 3.5.
So that's been also a benefit to buyers over time. I mean, you're saving, 0.8. If we're at 0.55 now from the beginning, we're like saving 3/4 of a point just from your mortgage insurance over time. And the reason why that happened was they wanted to protect themselves from foreclosures. And as we were getting out of the foreclosure prices, they brought it all the way up to that high 1% above, PMI 1.12 or 1.25. And then as they saw the foreclosure risk was so low for so long, we've had less than 1% foreclosure since that crisis for years. Right, so they dropped it to the 0.85,
probably,
and then they did again to 0.55.
Probably because they're writing more dependable loans.
Well, yeah, and there's been less risk. It's like proven that there's less risk. Nobody's, there's a stampede of foreclosures coming in.
Well, remember that the MI. I don't know how deep we want to get into this, but essentially, FHA and VA are mortgage insurance entities, essentially. Right. So the mandate, FHA's mandate is home ownership, the American dream. We want you to provide loans. We're going to set the rules for how to approve those people for loans. So we're going to set our own risk kind of assessment. And then we're going to provide the insurance to you, Mr. and Mrs. Lender. Right. The buyer or borrower pays that insurance, but it doesn't protect them at all. It protects the lender. Right. So, and the whole point is, well, you can do a loan with very little skin in the game, very little down payment. Don't worry, we're going to make sure it's a good loan, and we're going to make sure if there is a problem that you have some insurance, right? So FHA operates as a mortgage insurance entity, VA also mortgage insurance entity. So the MI that they charge either upfront or monthly, some cases both, it funds their insurance activity, right? So as that account is achieving certain milestones, right? And it's like that account shouldn't be growing forever. It should have enough in there to cover their exposure, and their exposure is some factor of how many claims are we going to have where we owe money to somebody, right? It's just like any insurance operation, right? Like, and they're not for profit. Hey, let's just make as much as possible so that we can diversify, and then we're going to get into all these. It's not that type of insurance company. It's like fund the insurance, account enough to cover our anticipated claim activity,
just in case,
right? So that's why that factor is changing
because their coffers are full.
They're trying to figure out like what's it going to take so that we're where we need to be, but not overfunded and certainly not underfunded. But getting back to the point, so you could definitely refinance from a loan that has MI into a new loan that has MI. It'd be nice to get rid of the mortgage insurance. Like, who wants to pay a fee that that doesn't give you anything other than the ability to do a low down payment loan.
Right. I guess it depends on how much your interest rate has changed, right?
Yeah.
You
So
might
just,
be willing to eat
like,
that MI if you're like, man, the interest rate's dropped by a full point.
if you did an FHA loan 2 years ago, let's just whatever, say you're at 7.5 and then your MI factor is 0.55. So you're basically 8.05. Like that's the way you should be thinking about it.
Right. You got to add them.
And then if you're new, let's say the new rate's 6.5, but you also have the MI at 0.55. Well, now you're at 7.05. So you're basically 1% lower, right? If you're going FHA to FHA. If you went FHA to conventional without MI, well, then that's a bigger, that's a bigger jump.
Half, right?
That's a bigger jump.
A point and a half.
But home values, unless you've done like, significant improvements, just the standard, how much has your house appreciated in the last year or 2 years? Like it's not 20%.
And people don't get 20% even during COVID, we didn't get 20% appreciation year over year. We were getting
some big numbers.
We were getting 12 and 13 and 14.
Yeah.
But that was like monster numbers. It's like, like what probably once in a lifetime situation.
Sure.
Because let me tell you, that wasn't a healthy market.
No.
It was like people learned about crack and couldn't get rid of it market. They had an addiction.
Yeah.
And slow markets are bad too, but that kind of market is not a healthy market. It's almost like cycle market.
And this like the refinance conversation, it's one of those because it can be presented by a professional in a very appealing way. And this is one of those things that I struggle with because I know that people are coming to me for solid advice. Like, hey, Mike, what's your expert opinion on does it make sense to refinance or not? But they will also have 5 other
people telling them that they
like,
can
hey,
do this.
Wow, it's a great, they'll call them up. They'll receive a phone call, right? Or something in the mail that says, hey, do you realize you can save, $200 a month?
Mm-hmm.
And it's like, yeah, you're right. Your payment might go down $200 a month. And that could make or break it, right? Like that's the goal. Like, hey, I'm so tight. Maybe this guy that you started the conversation with he just needs his payment to be lower, right? Maybe you got hit with the property tax increase that first or second year. And so just the budget is really, really tight. I'll do anything to save $200 a month. And it's like, okay, well, if you're willing to add on, maybe you had a down payment assistance. I was talking to somebody, they had Hometown Heroes, $18,000.
Mm-hmm.
Right. So if you're willing to add on $18,000
onto the loan
to your balance, right, to what you owe, and the closing costs, so whatever, let's say $25,000, $27,000, whatever. If you're willing to take on that additional loan amount
and start out at 30 years again.
And start a new 30-year loan, and the result is a $200 a month lower payment, that's okay, as long as you understand that's what you're doing.
It's almost like you're buying your house back in a way and getting a $200 less payment, but you're paying more for the house that you bought.
And then whatever the equity position you have built up over these last 2 years, well, now you're basically going to tap it out again.
You're wiping away any equity you have, and that's a lot of things people have to remember.
It's tough because I think about it that way, and I evaluate refinances in that way, and I counsel or advise people in that way. And I feel like sometimes I'm like talking myself out of business a little bit, but I got to do it. I got to do the right thing. Yeah. I got to do the right thing.
And here's the thing. Here's a real life example about this.
And by the way, you should feel that way because you're totally talking yourself out of business.
Oh, yeah, sure.
It's not like you feel that way. Well, it feels like I am. No, you are. You're talking yourself out of business. But you're doing the right thing by the people that are coming to you, and that's a beautiful thing.
Yeah.
That's the Florida Talk Real Estate way. That's why Mike Rauch is a valuable part of this team. That's why when you're looking for pros, when you're looking to buy a home, sell a home, stuck with a home, you don't know what to do, anything that touches the world of real estate, you need to go to somebody that's going to give you an understanding of your options and what's best for you and your family, not just, we can do it. Boom, it's done. It may not be your best case scenario. It may not be the best timing for you. And being told that and then making that decision, well, that's a different beast than just, hey, that's your best choice. Florida Talk Real Estate at least should be vetted when you're looking to touch anything in the world of real estate. FloridaTalkRealEstate.com. FloridaTalkRealEstate.com. Get to know the pros at FloridaTalkRealEstate.com.
Thank you, Johnny. Here's a real life example of this. I was going to bring it up today, Mike, but I'm going to go ahead and do it just to show a real life example of when Mike's given real news to people and they have a different expectation because they talk to other people and they're like they emotionally shut down because they're not getting the information
Yeah.
they want to hear. So remember, recently Joe and Linda wanted to sell
Yeah.
their house.
Yeah.
So they were going to sell a house to a relative, and the relative probably when Mike went through it, the relative was definitely not credit worthy, and there were a bunch of stuff the the potential buyer needed to do, and it was probably going to take a time. It wasn't just pay off a credit card. There was a lot of stuff involved in it. So Mike went over everything and explained, look, we can get this all worked out, but you're going to have to follow my instructions on how to do this.
There is a path.
And they were very kind of emotional. Is it right to say like emotionally shut down, like almost passive aggressive or something? I don't want to use the wrong term, but they didn't like what Mike was saying bottom line, because they really wanted to buy this house. And they were talking to other people who didn't go in depth as much as Mike did to really find out, and giving them total assurances that there would be no problem, they can get a loan. So here they have that person saying that. And then Mike's telling them, no, 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 no. You've got to do this and this and this and this in order to be qualified. And even then, you might have to still have some time constraints. And they didn't want to hear it. So they pulled away from Mike. Then they found out that they couldn't do it. So then they brought another relative in. And Mike went through the same thing, and it was no. And then finally, what ended up happening was the father stepped up. The ex-husband / father stepped in, and then he's buying the house. So it isn't even the people that originally started to do the whole thing. And he's an investor. He had his own guy that he wanted to work this, so I couldn't do anything about that. But the thing is, and that
At least
kind
they
of
didn't give up.
I know, but it really bummed me out because Mike gave all the correct information to those two buyers, right? Those potential buyers. Mike was 100% right, everything he said. And I was talking to the other mortgage broker that was saying that they could do it. And I was like, well, why do you think you could do it? And I had the information that Mike gave me, and I would bring it up. And he didn't even pull a hard pull on the credit yet, Mike, right? And they were making these assurances. And that's the point I'm trying to make. Mike will give you the real information you need to make the right decisions that sometimes can cost you money while you're exploring to buy the house, like inspections and appraisals, and know you can close, as opposed to other people that give you the assurances without doing the thorough checks you need to do to really know if you're good for that loan.
They have to do
And
their
it's
job.
so emotionally disappointing when you trust somebody like that and then you don't get the job done. It's devastating to the person.
Oh yeah, because
So
the goal
don't-
is,
It's
as you
also
always say, Mike, the goal is to close.
Yeah,
It's not to
ABC.
just get them
exactly.
in the process.
Yeah.
ABC, Johnny.
Yeah, what's
Always-
it?
Always be closing.
Always be closing.
Always be
But
close.
not in the sales way. And they're like, actually, let's get to the finish line.
Yeah, that's
It's
the goal.
also, not only is it devastating to buyers, sellers, agents who have all put time, emotional investment, monetary investment, everything. It's devastating to your career as a loan originator if you if you get people into like, there's no way to have legs in this business or longevity in real estate relationships if you're like every pre-approval you give, it's like 50-50. Like, yeah, I hope so. I
Let's
sure
throw
hope
the
but
spaghetti.
let's make it work.
We're
you
throwing
know,
the spaghetti.
And
Can you imagine if it was like a 50-50 shot with Mike every time? He'd be like, dude, what are we
Yeah.
doing here?
Yeah.
or if I was like, yeah,
Oh my
Jim, I don't
gosh.
know. I did what I need to do, but I just like it's got to go to underwriting. Like I just don't know. I don't know what the underwriter is going to think
Yeah,
about
we'll see.
any of this, right? And it's like, well, but we got to get into contract. We're going to spend, $1,000 on inspections and appraisals, and we got a loan deadline, a commitment, and like, can you imagine work? I mean, I'm sure you have.
Sure,
Like
yeah.
you have
Ugh.
been on the seller side of things, where at some point you realize the lending for the buyers got problems, and it's
I'm
like
having one right now.
It's like
A
it
big
probably gives you a heart attack, right? Like,
Well, this
because
one,
you got to perform, you got to close.
Listen to this. The buyers went to buy the house. It was a husband and wife. They had a mortgage broker. I wasn't really sure. I just got burned with another deal where the buyer's agent was saying, remember Bobby and Becky, and they had a buyer and they couldn't close, and they ended up keeping the deposit, right? The sellers got to keep the deposit.
Yeah.
So with that one, the wife lost the job, right? Basically, she lost her job.
It's tough.
So it turned into a whole thing, and they had to change the IRS transcripts and everything. Then there had to be a payment plan worked out. It was very skin of the teeth whether it was going to work out. We found out on Thursday that we're closing next week.
That's good.
But it took them about 3.5, 4 weeks, and it was very iffy. It's very scary for everybody involved in the deal. Yeah, it's very stressful. The point, I want to take the break, but I hope people that are talking about buying or refining really understand what we're talking about working with Mike. He's going to give you real advice, real information, and be very helpful on how to solve problems the right way and not give you false hopes. So anytime you're thinking about that, you got to think of us and give us a call, and we'll get you over to Mike right away.
Yeah, you got to go to Pros. Look, you know a lot of people. You probably know some people that work in the field. I wish I could. Can we maybe work on like a cheat sheet, like a way to vet people to determine if you're working with people that really are as thorough as you'd like them to be? Because that would be a huge advantage. You should be vetting your professionals. And I encourage you to do that. Start with the team at floridatalkrealestate.com. I'm not driving you in that direction to say like, hey, these are the only people that are great at what they do. There are lots of people that are very good at what they do in this industry, but there's a ton more that are not good at all at their jobs. And that is a crapshoot that I don't want you to be in when you're trying to find a pros pro. Buying a home, selling a home, stuck with a home, you don't know what to do. These are very stressful times. This is some of the biggest purchases, the biggest transactions of your life. You got to have people that have your best interest and know all the pitfalls. Know what your options are and present them to you very articulately and give you an understanding so that you can sort through it what's best for you and your family. So start your vetting process at floridatalkrealestate.com. I got a professional in every aspect. One click away, floridatalkrealestate.com. You hear many of them here on our shows on Saturday. And there's only so many microphones, so there's many that you don't hear every Saturday. But believe me when I tell you, they all are like-minded. They work cohesively together, and it's all about treating the people right, being a very contributing member of the community, and seeing what happens for you and your family. It puts a smile on their face. Helping you along the way is what's most important. The business always comes in the end when you're right by people. So go to floridatalkrealestate.com. Learn what we're talking about. floridatalkrealestate.com. Know it, use it, love it, share it. You can change lives, including your very own, at floridatalkrealestate.com. We're back in 4 minutes. Thanks for being with us every Saturday. Florida Talk Real Estate right here. It's Real Radio.
We're everywhere you need to be. Find your favorite show at realradio921.com. Here's what's happening with the weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Carl. We are going to start to see pockets of isolated showers as soon as noon. And around mid-afternoon, we'll start watching some of those heavier downpours developing along the sea breeze boundary. So depending on which one of those early morning showers start to linger. Later in the afternoon and evening, we'll see another round of heavy downpours.
This report is sponsored by Rocket Mortgage.
Homeowners, have you been waiting to renovate or pay down debt? Mortgage rates have been dropping, so it may be time to tap into your home's equity. Get started at rocketmortgage.com. Call 800-863-4332 for cost information and conditions. Rocket Mortgage LLC, licensed in all 50 states. NMLS ConsumerAccess.org, number 3030.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
There it is. I give it to you again. 877-927-6969. Toll free. We'll take you up until 11 o'clock as we do every Saturday. We're live on this 13th of September. Thanks for being out there. If you do dial in, remember to say good morning to Jimothy, our producer extraordinaire. What's up, my dude?
Hello, and good morning, gentlemen. By the way, I checked our international numbers. We're way up in Portugal.
Wow.
Oh, that's pretty good.
Mm-hmm. That's that Facebook push that he's doing for
bet
Portugal.
it is. Yep.
Yeah,
Yep.
big Portuguese push. Mm-hmm. Nice. It works.
See,
it works. Amazing. Worldwide on your free download, your iHeartRadio app. And thanks for being out there, Portugal. We see you.
You remember we did Good Morning?
Yeah.
What is it?
I don't remember.
How you gonna shout out to our Portuguese peeps?
What was that? What was that again? It was but you. I think that's what it was.
Bom dia. Bom dia.
Bom dia.
Bom dia.
Bom dia.
Yeah. It's like BOM and DIA, but you know the D kind of you have to give it a little Gia.
Where is Portuguese spoken?
In Portugal and in Brazil.
Brazil, right? Okay, yeah. I'm like, they speak Portuguese somewhere else too, and it's Brazil.
It's Brazil.
Okay.
I thought I read something where there's like 13 countries that speak Portuguese. I thought I just heard that somewhere, and I was like, whoa, I didn't know that.
I only know of 2.
Predominantly speak Portuguese?
So 13?
It was something that like just went. It wasn't like I was reading something full. It was just like a factoid that flashed across my mind. I was picking up. I'm like, wow, I never knew that.
Yeah.
Who knows?
I wonder how many times I've heard Portuguese being spoken and never even realized it was Portuguese.
Yeah.
Assumed it was.
Yeah.
Maybe like
Spanish or Creole or something like that.
If I confuse it for something.
Yeah.
Interesting.
Yeah, it is.
Jimothy, our producer extraordinaire. Johnny C, that's me. Mike Rauch, he's the mortgage guy from the mortgage firm, and he evidently knows some Portuguese.
Couple of words.
Yeah.
If you do jujitsu long enough, you probably
I was going to say
something up there.
Is that your JJ background?
Yeah,
Your BJJ background? BJJ.
Yeah.
There's 2 J's. You better learn how to speak Portuguese.
Apparently, there's a few countries in Africa that speak Portuguese, including
I would never guess that.
Mozambique. Who knew?
Mozambique's Portuguese?
Yeah.
Predominantly Portuguese in Mozambique.
Yeah.
Interesting.
Very well. Isn't that wow?
So I learned something
Official
new every
language.
day, and that might be the only thing I learned today. But that's amazing.
Well, let me learn you something.
Thank you. Is there a lot of crossover between Spanish and Portuguese or no?
There's enough where it's familiar, but they're like a Spanish speaker cannot speak Portuguese and vice versa.
Can you understand it?
I would say so Portuguese speakers can understand Spanish more than a Spanish speaker can understand Portuguese. So there's definitely some crossover.
You're fluent in Spanish, yes?
Sí, señor.
Know a little bit of Portuguese?
Not enough.
But you would say somebody that's fluent in Portuguese, you'd be able to understand a Spanish conversation better than the opposite.
The opposite, yeah, for sure.
Interesting.
Yeah.
Which one would you suggest learning? Because evidently Portuguese is more far-reaching than...
No,
because I can understand Spanish. If I know Portuguese, is there more advantage to learn Portuguese?
Oh, I see what you're saying. Yeah.
So, yeah, I think if I were to bring up the list of Spanish-speaking countries, it would be more than the Portuguese.
Yeah. I just wouldn't be able to understand Portuguese very well.
I would probably recommend Spanish, but that's just, we live in South Florida.
Right.
Spanish has so many different dialects too. I mean, it's not just one Spanish. I mean, there are so many different ones.
True.
The Spanish.
There's Castilian Spanish. There's South American Spanish.
I don't think there's that much variation in the overall Spanish language, but there's certainly accents all over, regional accents. Yes.
Yeah.
And
I wonder what the Spanish country country redneck accent is, right? Because they got it, right?
Yeah,
they got it.
Like equivalent of that,
and like the rich people, I wonder what kind of accents like the rich people have, Thurston Howell from Gilligan's, right? If they talk like that.
Have you ever heard Bad Bunny speak Spanish?
Yes.
No, I haven't heard you.
Is that it?
I don't know which one you were going for.
Oh,
that's the rich one? No,
that's the other one.
It used to be the one, but
is that the hood?
That's the rich one.
The hood dialect?
Yeah, exactly.
It's like the hood dialect.
That's just like the street,
Bad
Caribbean
street dialect.
That dude is a global icon. That dude is a monster.
He did something, man. I saw him the other day. He had it was a picture. He's wearing jeans. He's got like a rope as a belt. I'm like, what's going on here? Like, he's on tour with this thing.
For him.
What's happening?
Dude's a beast.
What's happening?
Mike Rauch, mortgage guy from the Mortgage Room. I'm Johnny C, your old buddy, your old pal. Of course, Jimmy D's here. He's our fearless leader. 13 plus years now. I've told you he runs a top producing Keller Williams team, the Florida Home Pros team at Keller Williams Innovations. Hi, Jimmy D.
Hey, everybody. Thanks, Johnny. I appreciate it.
Yeah,
okay, I'll stop. I won't talk my Portuguese today. Okay, so everybody understands.
Hey, Jim, your camera's aiming the wrong way.
I guess that would help.
Oh, it's looking at Mike.
Thank you,
nice,
Jimmy, because I never look at the camera when I'm on the show. Hold on. Yeah, there it is. Okay, thank you, Jimmy. Appreciate it. Yeah, pros. I've only been doing this 13 years. How long have we been on the show, Johnny? 13 years, right?
Now, yeah. But
can you imagine next year it's going to say 14?
Now it's looking at the ceiling. Just FYI.
Wow. Oh, is it? What
That's all right.
He's got a mind of its own.
Yeah, it's just doing its own thing. I guess I took over.
I was going to say, if I were a conspiracy theorist, are you human? It's supposed to be picking up the human.
I was like, I don't want to see Jimmy D. Right?
It's happening.
Okay, Mike, we're going to talk about mortgage rates right now. And Johnny, we're going to talk about mortgage rates. So we're not going to talk about the national economy because that's going to be a little other segment. Okay, so I want to kind of separate them because I want to focus on the mortgage rates because it is news. So I don't want to talk about the future and stuff about what's going to happen. I want to kind of just focus on where we're at and where we've been with interest rates over the last 2 years. Okay. And then later on in the show, we're going to probably the next segment, we'll go right into the current economy and what all this stuff means and what's probably going to happen in the near future.
You're predicting where rates are going to be.
Well, predicting where the rate's going to be and even farther than that, like the rate cut for the Fed is coming out next Wednesday, Thursday.
Bold prediction.
But no, I'm saying they're meeting next Wednesday, Thursday, right? So they're going to make a decision on that. But I think what I'd like to do is take a look a little bit longer down the road for the bigger picture, because I think there's a lot of interesting factors that people need to consider. And when you're trying to buy or sell, the people that are trying to weigh the market, I want to kind of let them know where we're at. Okay.
Sure.
So the first thing is the big news, of course, is that we had a 0.15 drop from 6.5 to 6.35 according to the Freddie Mac weekly survey. That's been out since 1971, right? So we're at 6.35. Now that's pretty good. I think that is, Mike, is that the low for the year?
It's the lowest in almost a year.
Yeah, it's the low for a year. for this year. But right, the last time that we were near this, because you can't get the perfect number, was October. We were at 6.32, October 10th, 2024. And then the week after that, we went up to 6.44, right? So 6.32 is the closest number to the 6.35. And that was last October. But here's the interesting thing. If people are trying to weigh out all this interest rates stuff, trying to gauge the market and their decisions based on interest rates only, which we all know is kind of, we've talked about this ad nauseum, kind of a silly exercise. It's a factor, but shouldn't be the factor.
Yep.
If you start from January, I went back to January, well, even going back to October of 2024, the highest we got, so that was 6.32. The highest we got was 7.04. And the lowest we got is since October of last year is 6.35. So we've only had a 0.65, roughly 0.65, 0.7 variance for the whole year.
Yes.
And it didn't like go up 0.7. It went up a little bit, went down a little bit, went up a little bit again, went down a little bit again. But it hung within that roughly half point interest rate. The low was pretty much 6.5 and the high was 7 until last week, right? And then last week we started dropping a lot lower.
We've had, I think the reason it's kind of news now, Jim, is like, I'm just looking at it, we've had pretty much 2 months now of
8
incremental
weeks.
Reductions, right? So 2 months ago we were at 6.75, right? 6.75, and we've gone down now to 6.35. So it's, what's that, Johnny? 0.4?
Yeah.
0.4. I'm going to call it 0.5%.
We'll call it a half.
Call it a half. So basically going down 0.5% in a 2-month period, which has been big news if you're actively shopping or perhaps even actively getting into contract or maybe even already locked in to a month ago or 2 months ago. And now you're looking at a float down. Like, this is the type of movement where you can kind of renegotiate your rate based on market movement. So we're looking at that for people who are locked. But that's been a headline. But yeah, I agree. It's been a year. We're basically right where we were a year ago as far as rates go. Now, don't look too closely at that chart because you'll see there was a dip leading into September,
and it went up dramatically.
And remember, last September the Fed dropped 0.5, right? And then that 0.5, Jim. What was the deal back then? It like wasn't enough, or it was more than people thought. A quarter.
People thought it was going to be a quarter and did 0.5. Everybody went, "Wow,
why?"
Yeah,
but they were like, "Wait a second, why?" And then then the from September, October, November, the rates all the way through January kind of crept back up a little bit. So if you're thinking that pattern is going to repeat, it kind of looks that way right now as we're dropping in anticipation of the Fed doing something, right?
We're not talking about that right now.
Oh, okay.
Okay,
yeah.
but you're on point on everything. But I just want to keep on the interest rates a little bit longer, Mike, if you don't mind.
Yeah. You're talking about the economy.
Yeah, because now you're heading into like what what happened. But you are right. All of that happened, and we did have a dramatic increase. I'd like to use the number. We were at 6.84. We were at 6.84 July. July. I'm sorry. Hold on. No, wait. We were at 6.84 in November, right? So we dropped almost a half a point from November, right? So like if you were buying in November of last year, we are a half point below that now, right? So, and a half point does save you money and it gives you more purchasing power and everything. But unless you're really, really super tight on your budget, the half point for most people isn't going to make or break. Is that true, Mike? When you normally go through people's files?
So you have to be at an extreme of what you qualify for, right? So when you're getting pre-approved for a mortgage, you're getting approved for a mortgage, underwritten for a mortgage, you have a maximum payment that you will qualify for. So, right, the PITI, right? You have a max there. That's your limit. You're not approved for a loan amount. You're not approved for purchase price. You're approved for a monthly payment based on your debt to income ratio traditionally, right? So if you're at the extreme, let's say you qualify for $35.27 a month, right? I'm talking, it gets that specific. If you're at that extreme, half a point on the interest rate, of course, is a can bring you from above your limit to below your limit.
Yep.
Similarly to having the insurance number $50 less a month could bring you above or below your limit.
Sure.
So it is important. If you're,
do most people in today's market, let's say over the last 2 years, are most people maxing out what they can do, like really get up to that razor edge of their maximum approval, or most people can, like,
I would say no, and I would say that most people, to me, are running into their own budget constraint before they're hitting my mortgage limit constraint.
So they're saying, like, let's say they're approved for $3,800 a month, but in their mind they don't want to pay a penny more than 34.
Exactly.
And then they get 34.75, and they just, because they know their budget well, they just feel that $75 a month isn't going to make it. Although the bank will give them the money.
Right.
And I think, and that's smart. That's not, I just want to make people understand that when me and Mike are talking about this, we're not trying to get you up to a number that, if you feel the line in the sand is 3,400 in that example, stick to your line in the sand. We're not going to try to convince you otherwise. We don't know your lifestyle and all the needs that you have.
What I talk to people when I have my initial consultation, usually, 10, 15-minute phone call where I'm kind of like explaining the process, gathering initial information on that particular aspect. I tell people, like, what you qualify for and what you can afford are two different numbers, and bringing it down to a monthly payment, right? So have you thought about where you want to be from a budget perspective? What are you paying now? Are you renting? Like, what are you paying now? How does that fit your goals as far as being able to save money every month? Are you tight whatever. So people have different, they're usually at different stages in their life as far as answering that question, but most people have some idea of what they think they can afford. And then I say, well, what you qualify for is my world. What you can afford, that's your world. I want my number to be higher than your number.
Mm-hmm.
Not because I want you to go crazy and push up on your budget. You might have to push up on your budget to get the right house, but I want you in control of where you draw that line. And the opposite, where I'm the one who's the lower of those two numbers, that's a tricky one, because then people are basically having to cut back on what they can buy in order to get a loan that qualifies, when they know, like, hey, I can pay $3,800 a month, but you only got me qualified for 32. And I say, well, yeah. So, can we figure that out? How do you get to the higher price point?
Very common, like with self-employed, right?
Sure.
Based on what they've turned in over the years, or over the past 2 years.
Yeah, it could be. I'm paying $3,800 right now a month. I'm fine.
Mm-hmm.
I've never missed a payment. Doesn't that count for something? I'm like,
although it does a little bit now, right? We never talked about that. They said that rental history now can be used for credit. Did you ever? We never talked about it on the show. That was like 2 months ago, 3 months ago.
Yeah.
I forgot about it.
So it has to do with automated underwriting.
Mm-hmm.
I don't know how deep you want me to get into it for this topic, but let's just say that there's a computer analysis of whether your loan meets the guidelines.
Mm-hmm.
So underwriting approval, but it's an automated underwriting approval. So essentially you have an application. This is when people talk about, like, if you've been in this world, people talk about the DU, right? The desktop underwriter. That's Fannie Mae's product for automated underwriting. Freddie Mac has one called LP, or loan prospectors, right? It's either DU or LP. That essentially means, like, we run it, we put your details into the application. Forget about the documentation, just the information on your application. You run that through the system. It looks at your credit, it looks at your income, it looks at your cash position, all based on what's on the application. And it basically says, yes, this loan meets the guidelines. It's going to be approved. And then, gather these documents, right? So it's kind of like a framework for underwriting the loan. If you're on, and there's some assessment in there, right? There's some algorithmic risk assessment happening. So it's not only, do you meet the guidelines minimum, but also let's take a little bit of risk analysis on your credit profile, for example. Your example earlier is a good one, where just having a credit score isn't going to be enough. You need the credit score and probably some time to kind of let your poor credit history be less impactful, right? Because the automated underwriting, like, you can't get automated underwriting if you don't have the right score, but you also can't get that risk analysis that the computer model does unless you have the credit score you need. So it's like, which comes first, right? So if you are on the edge, like where you have these negative factors, but these positive factors, the rental history, positive rental history can be included kind of on the positive side of the ledger and can be the difference between getting approved at a certain ratio versus not getting approved. So let's say your max debt to income is 50%. Well, you're not getting approved at 50%, but you can get approved at 43%. Mm-hmm. Well, if you put in the positive credit history, maybe now, the positive rental history, meaning like, hey, you actually do pay your housing obligation on time. You don't have any problem with that. That might allow you to get over that threshold where you're now getting approved at 50 DTI.
Well, it isn't as good as I was hoping, but it's better than nothing because I have a lot of people that when they're renters and they feel like when they're having problems with their credit to try to get qualified, they're like, I've been a perfect rental payer for a very, very long time. Doesn't that count for anything? And now it does a little bit.
That's the other thing is like you can do the Vanguard scoring model, I think is probably what you were thinking about, is like traditionally your housing history, unless you're paying a mortgage, doesn't get assessed as part of your credit profile law, right? It's like because you were never lent money, right? The credit scoring is all about you borrowed money in one capacity and now you're paying it back per the terms that you agreed to. That makes you a good credit risk, right? Like, Jim, you borrowed money from me, but you paid me back how we agreed. When you rent, there's no borrowing of money, right? So there is a payment obligation.
You're paying for a service, basically. You're paying for a service.
So it hasn't been in the traditional credit assessment because you didn't borrow any money. Nobody loaned you money. So the Vanguard one will take that into account. So maybe you get a different score that does include your housing history, even though you didn't have a mortgage, you have a housing history that means you pay your bills on time. So there's that as well. The Vanguard scoring model versus the FICO.
Perfect.
Let's go ahead and take a break. Is that okay?
Sure. Already?
We're going to flip and get a little more into how the economy affects what we're talking about with the interest rates and what's going to happen in the future. There's a lot of big headlines that are out there. I want to kind of set an expectation for people for real about what's happening in the headlines versus what's probably going to happen. And we're going to get into all that next.
Perfect. We still got an hour remaining on this Saturday. Of course, we'll get you up into the locker room. I assume the locker room is live today. Jimothy, do you know otherwise?
Sure is. Coming on at 11 o'clock.
Perfect.
And we got a little Florida Gator action, too, starting at 4:30 today.
Beautiful. We are home of Florida Gator football here at Real Radio. Have been for years and hopefully will continue to be for many years to come. We got our hour remaining on this Saturday, September 13th. So stick around. Lots of very valuable information coming up. And always remember, FloridaTalkRealEstate.com, your one-stop real estate shop. When you need pros. If you're buying a home, selling a home, stuck with a home, you don't know what to do, go to FloridaTalkRealEstate.com. You can call the hotline too if you like, 888-973-7828, answered 24 hours a day, 7 days a week by a live body. But remember, FloridaTalkRealEstate.com. Again, the hotline will be there for you. Fill out the contact sheet. You're instantly going to be in contact, and we're going to have your information. You'll be sorted through and get the pros pro that you're looking for. And you may need a bunch of the pros on the team, and that's a beautiful thing to have a resource like your one-stop real estate shop, FloridaTalkRealEstate.com. And if you'd like to be a part of the program, always remember you can dial in toll-free at 877-927-6969. If you want to dial in right now, you can. It'll be a 4-minute wait, and we're back at it on a Saturday. Florida Talk Real Estate right here on Real Radio.
When you give up trying to teach your parents how to use their smart speaker and take it home, tell your smart device to play Real Radio 92.1 on iHeartRadio. Here's the latest with weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Carl. We are going to start to see pockets of isolated showers as soon as noon. And around mid-afternoon, we'll start watching some of those heavier downpours developing along the sea breeze boundary. So depending on which one of those early morning showers start to linger. Later in the afternoon and evening, we'll see another round of heavy downpours.
This report is sponsored by Rocket Mortgage.
Homeowners, would you like to save on your monthly payments? Mortgage rates have been dropping. Visit rocketmortgage.com today to see what you could save. Call 800-863-4332 for cost information and conditions. Rocket Mortgage LLC, licensed in all 50 states. NMLSConsumerAccess.org, number 3030.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation, because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
There he is. Here he am. Almost ready. Sitting back down, putting headphones on. Johnny C. Welcome back, buddy.
Was there a line?
Impeccable timing.
There was a line.
Good time.
It was, yeah. And I'm sitting there pacing the whole time. I'm like, come on, I gotta go. Gosh, it's supposed to be 10 or less over here. Kick saving the beauty, Jimothy. Thank you very much.
Thank you, Johnny. Good to see you, buddy.
Always a pleasure. Johnny C, that's me. Mike Rauch is right here. He's the mortgage guy from the mortgage firm. Hello, Michael.
Hello. Good morning.
Good morning to you as well. And of course, our fearless leader is Jimmy D. He's been running a top producing Keller Williams team for 13 plus years now, the Florida Home Pros team at Keller Williams Innovations. Jimmy D, Jim DePola, how you be?
Hey, I'm doing good, guys. Really happy Saturday, and we're just getting into now a little bit about what's going on with the economy and how it relates to the real estate market. Of course, the number one thing you read about in the economy when it comes to housing is the Fed going to cut the rates next week, right? That's the big thing. And for months and months and months, the Fed has, since the beginning of the year, the Fed has refused to make cuts. Everybody thought we would be at 3% for the Fed rate right now, and we're at like 4.25 because they thought we were going to cut in the spring, this year. And that didn't happen because of the tariffs. According to the Fed, they were worried about the tariffs and the unpredictability of what that was going to happen.
Too much
And
uncertainty.
they had just pushed down inflation. It took them, I don't know, was it 18 months or like a year, Johnny, for them to get from 9% to that under 3% inflation? I felt like 18 months is too long. I don't remember if it was like a year or 18 months, but it took quite a while for us to beat down that inflation that we had. And we hadn't seen inflation at 9% in I don't know how long. So it took them a while to beat it down. And then they didn't want to wreck anything because it took us so long to stop the inflation. And then now everything's changed. So there was a headline in CNN, and I know I don't like getting red and blue about things. I just don't do that, but I just want to reveal the source because there's a little bit of tinge of drama in the headline. And the headline was Whiff of Stagflation. Oh, no, they called it a whiff of early onset stagflation is what the report was. It's pretty new, so you can look it up if you want to read it yourself. But what they're saying is, and this is what I said last week before I read these headlines, is, hey, inflation is starting to spark up again. It's going up a little higher. And then Thursday, we had a reconfirmation. This Thursday, reconfirmation of how weaker the job market is than what we've been thinking. I mean, when you read the job reports, and we've been talking about every month now for over a year, they were pretty strong in 2024. They were amazingly strong. We were getting 250,000 jobs. Remember that? 250,000 jobs, 300,000 jobs created every month, right? Now we found out after the readjustment that every one of those months, on average, there were 75,000 jobs less than reported that were created, right? 75,000 less. So they were over the estimate by 75,000 a month, right? Which is a lot of jobs, right? That's 0.5% on unemployment if you add it all together. So now what we have is increasing inflation and we have increasing unemployment because the unemployment claims came out on Thursday, and it was the highest spike that we've had since I think 2021 or 2020. And we had 263,000 new job claims, which is about 27,000 more people applying for first-time unemployment claims compared to the week before, right? So
the week before,
right? Not year over year, but the week before. So what we
and when I read these numbers, I didn't know how to totally consume them. Is 27,000 new unemployment claims in a week? Is that it?
Yeah.
Is that a big blow? It doesn't feel like a big number to me, but I don't know. I'm kind of ignorant to what the scope of what a healthy introduction to the unemployment claims would be. It doesn't feel like a staggeringly big number to me, but maybe it is.
Can I read this?
That's my ignorance, though.
Can I read this paragraph? Because I had to read this stuff like 4 times. I kind of went wonky on this. I didn't just read the headlines from CNBC.
No,
and
you
Forbes
can't just
and all
read
that.
headlines.
I was I read an article that was really good primer. I'm going to save this article from advisorperspectives.com. And it's really a financial advisor group, but they were explaining initial unemployment claims surged to 4-year high. So let me read you this one paragraph, and it went very wonky. It's like 4 pages long, a lot of really tough reading and charts. Okay. Initial job claims measure the number of people who file for unemployment for the first time in a given week. In the week ending September 6th, initial jobless claims were at a seasonally adjusted level of 263,000, the highest level in nearly 4 years. This represents an increase of 27,000 from the previous week's figure, the largest weekly jump since last October. The last reading was much higher than the forecast of 235,000. So they thought there were going to be 235,000 jobless claims, so there's 263. So this isn't the end of the world, but it might be. This is are we at the beginning of a stagflation period is what the concern is.
How long do people have after losing a job? Because you can't quit a job and get unemployment, can you? Is that more of my ignorance?
You know, it's funny.
I don't
I've
think
never
you can. I don't
gone
think
through the process, so I don't know the answer to that.
I don't think I've ever collected unemployment either. Maybe once when I was much younger, but I don't recall it.
I've never done unemployment.
I have always, and again, this is my ignorance to it, but I've always thought you had to
Get
be
let
laid
go.
off,
Mhm.
let go, like downsized in some way. And what's the timeline for you to collect? Because this doesn't mean these people just lost their jobs. They could have been unemployed or underemployed for a long time now, from my perspective, and then said, you know what, I got to get this money. I'm starting to fall behind. Let me get on unemployment.
A lot of people do that too.
Unless there's a timeline where you have to file.
I'm looking at a chart right now, and it's a week over week number. So it's almost like our Freddie
Mac report.
So who knows what all the reasons are, but you have a week over week chart that you can look at just as a baseline. So
Sure.
I see, they say, it's the highest it's been all year. 260, what is it, Jim?
263.
262. The previous was June of this year, 250,000, which is higher than last week's 235,000. So these week over week increments, I think that's probably, an interesting number to look at, because the week prior to that only jumped and went from 229 to 236.
Mm-hmm.
Which happens to be lower than the 235 estimate, which is kind of weird. Right? It was 236. Right. They expected it to come down a little bit, but it jumped up. So I don't know. It's a week over week report.
It could just be a blip. It isn't a trend week over week. If you have this big jump and it happens one time, it could go down just as fast. Like next week, it could happen again.
Well, in order for that to happen, people have to get off unemployment. And in my mind, is because there's a timeline for it, right? It only lasts for so long, if I'm not mistaken.
Right.
And again, I'm really ignorant in this world. But you get a job, you're off unemployment. So that's got to tell me that we're going to have all of a sudden, people are going to find jobs. And
here's the problem, right? Because we just had that report the week before last, right? Not this week. Last week, we had the report where we had 7.18 million jobs, but 7.38 million job seekers.
Well, but
that was the first time that we ever had more people than jobs in a very long time. We have higher unemployment and less jobs.
But we also have a mentality problem. Too many people are like, I'm not working for $16 an hour. I'm not taking that $13 an hour job. It's like, you got to get a job. And you can't hold out for my management level all the time. You have to go get that $16, that $19 an hour job. The ideal of, I should make more than that. I'm holding out for management. It's like, sometimes that's the best you can do right now. Go get that job.
Right,
and I think the mentality.
But a lot of people, we're just starting that mentality where you have to change. There has been an attitude that there were so many jobs for the amount of people. That's why we have low unemployment. That the employees, I'm not saying it was the best, but compared to many, many years, the employees had a gravy day for about 2 years, right? A year and a half, 2 years, where their salaries were increasing faster than the inflation, which hasn't happened in a long time. And when the salaries were increasing faster than our inflation rate, even though our inflation rate was pretty high. So the employees had the ability, because there were so many openings and so little employees, they could act like that. I'm not going to take that $16 job. I'm going to wait till somebody hires me for that $25 an hour job, right? And I want that management job, whatever. But now you're right, Johnny. It's coming to the point where those jobs won't be as so readily available, and there won't be as much need because the employers are scaling back. So people that have that attitude, they're probably going to get burned because they're not in
get on unemployment.
Yeah, exactly.
Yeah,
right. So so there's a lot of stuff going on right now. It's a very topsy-turvy economic thing, and there's so many people that want to win. This is what's driving me crazy about today's world, is that it doesn't matter if the economy's healthy or not. it more matters that you want your side to win. So if the economy's good and you're on the other side that's not in power, then you're not going to admit that the economy is good because you want to get back in power. And the people that are in power, if the economy isn't doing so good, they're not admitting it, right? If it's getting weak or something, they don't want to admit it because they don't want to give in to the other side. And it doesn't matter if it's, red or blue. To me, it matters, do we have a good, solid economy or we do not?
I think most people, it's very localized. Like, can I cover my bills or not?
And
right? Right. Like that's these weird, like which direction is the economy going and all of that. For most people, it's, do I have a job? Am I making enough money? Am I having to extend myself on credit? Can I plan this vacation that I wanted, or we're going to have to tighten up, right? Like that's where it's at. These people who, are looking at refinances, it's that same question, right? These things are tight. I just need things to get better. So what's happening on Main Street, Johnny? What's happening? Is it tight?
It seems like it's pretty tight.
Feels tight, right?
Yeah.
Feels extended on credit. I talked to a lot of people who are talking,
But keep spending. We have to keep spending, though. We have to. I'm not saying that.
Spending.
I'm not joking. Our economy depends on it.
Yeah.
We have to.
Now, I just lost it. I'm going to find it again. But we had that report that came out with the different types of products and whether the inflation is there or not. Okay, you remember that little chart? Eggs, is it up or down compared to last month and stuff, right?
Sure.
I don't have it in front of me right now, but the bottom line is
eggs are up or down.
Almost all food staples are up somewhere between 5% and 20% higher. Eggs, beef, these are things I read yesterday. Eggs, beef, vegetables. Didn't say so much about dairy and stuff, but a lot of food products. The only thing that went down a little bit was energy, like it went down 1.9%. And restaurants, like if you sit down at a restaurant, that went up 4%. If fast food was 5%, school lunches went up 5.8% for costs, right? And they're saying
lunches,
because that's a cost too. They actually have a separate. Increased? Yeah, they had the three kinds: regular restaurant, fast restaurants, like institutional places, like employers.
I'll tell you what, the school cafeteria is probably still the cheapest place to get a meal. So if you could, like, you can't go out, Johnny. You're not going out to your local restaurant.
That's before the cuts in the SNAP program. Now we have the SNAP program, so who knows if that's true or not? It used to be like that, but they just cut out SNAP.
Well, Florida's free school lunch.
I'm sorry.
I'm talking like for a night out, like open up the cafeteria, right?
Are they cutting that out? Are they cutting out those free lunches?
Maybe next year. It's in place this year still.
Interesting.
Free breakfast and free lunch for students. In the summertime, they can go get a meal at school too.
Yeah. So inflation is actually going up, and this is now getting back to the Fed and us in real life. What does the hell does it mean to us, right? Especially
for a buyer
in the real
or
perspective.
Refinance. Yeah.
Headline in Market Watch, right, which is a pretty legitimate, non-biased review of what's going on in the real estate market and the economy. Don't expect mortgage rates to fall after the Fed's interest rates cuts. And you're already seeing the headlines saying now kind of what we were saying back in November 2023 when they started the cuts. Hey, if they cut too much, we're going to start seeing the interest rates go up really high. And that's what happened. We had the fastest interest rate increase in the history that they've recorded Freddie Mac. We went up 0.75 of a point in 4 weeks after the Fed cut the rate last year.
Because they cut too much.
And they were worried that the economy was not doing good, and that's why they had such a severe cut.
Which, I mean, if you're talking about unemployment up, inflation up, if the Fed's cutting rates,
well, yeah. So
in the face of that,
well, that's the whole stagflation problem. So normally, the way that the Fed is a blunt tool, and what their job is to make sure that we have full employment or good employment, and that things don't cost too much. And the problem with that is that both of those things are at cross purposes. So normally what happens in a market, if you have higher unemployment, normally prices naturally drop because you have less consumer demand because you have higher unemployment. So it kind of corrects itself. And other times you might have high inflation, but if you have um, um, the reason why you have high inflation, usually there's more consumer demand because they're
salaries are up or
employed
whatever.
better and they
Yeah.
have better jobs, so they can pay more money, so they raise the prices. But right now, we're starting at the beginning of a very tough period where they're not connected to each other anymore in the opposite direction. They're both doing the same thing in a way. So unemployment is starting to sneak up and inflation is starting to put up. So the Fed can't use their tools to fix both things.
They gotta decide.
They have to decide,
Yep.
are we care about unemployment or do we care about inflation? Everybody's betting that the Fed is going to bet next Wednesday that they're going to cut the rate because of the labor market. And what the Fed has already said is it's much scarier for the labor market. Once the labor market gets weak, it can get weak really fast and go downhill really fast.
Right.
Inflation takes longer time to build up usually.
So
So
are
they're
they
going to
saying-
favor and type of the labor market, I think.
Well, and
So
you're
are they saying they need to open
sure.
up access to money because people are going to need money? Businesses are going to need money.
That's it.
Consumers are going to need money. So we need to make it a little less painful for them because we know they're coming for it.
Yep.
Is
That's
that, I mean,
Well,
it.
no, what they're trying to do is they're trying to make money cheaper
yeah.
so that businesses, more than regular people, that businesses will still employ people because
Right.
we're going to have an employment problem.
Mm.
So they're trying to give incentives to the business like, hey, we're giving you cheap money, so hire that employee, right? Do something and hire that employee, create a job. We're giving you low money to borrow to do that and leverage that to make more money. That's what happened with the PPP loans during COVID,
Yeah.
right? They shoved money at the people. It was free money or cheap money, right? That they could use to keep employment going. So if they do that, though, there's going to be a very good risk that the inflation is going to go up much higher, right? The inflation is going to, because if we get stronger consumer demand because of the cheap money, because
Sure.
the consumers are going to be able to get cheap money too. It isn't just going to be the business owners.
But I mean, you got to think that I want to say, the Fed chair. It's not the Fed chair. It's the board of governors, whatever they're called, right? Like they have to know. Like they are eagle eye on inflation, so they have to be able to say, like, okay, well, when we do this, what you just predicted, like they got to be out in front of that. They think inflation's going to go up. So they're going to lower the Fed by half a point or whatever it is, and then they're going to be watching inflation, and then what?
Well, that's what happened from 1976, 77 until 82, 83. That's what we went through.
Yeah.
So how they decided to deal with it back then, they decided that inflation was worse than the unemployment, and unemployment went sky high at that point, right? I think they were 9%, 10%
I was gonna say it was like 10% or
unemployment.
So
something.
they took their eye off the unemployment ball.
They had
to fight the inflation
because
ball,
the inflation was so crazy. So they stifled the inflation by having so many people unemployed they couldn't buy stuff, and the businesses or the companies had to reduce their prices to survive, right? But it had to be that bad. We had to get to like super high
Which is what we
unemployment.
just saw, right?
Right.
We just saw 2020. So there's another chart. Here's the inflation chart. It was 9. It was basically June of 2022, and it took a year to get down to 3.
Right.
So 1 year later, which is where they bumped up. We all remember
Mhm.
that rates went a little bit crazy.
So even the headline in market where it says don't expect mortgage rates to fall after the Fed cut rates, here's the other sub headline: waiting for the Fed to cut mortgage rates, waiting for the Fed to cut so mortgage rates will go down is a flawed idea. This is according to a professor that specializes in real estate.
Just one guy, though.
Yeah, I know,
mean,
right?
come on.
But here's the thing: we're one guy plus Florida Talk Real Estate.
I was gonna say you're preaching to the
Plus
choir,
Florida Talk Real
guy.
Estate. So here's the thing: is that this is what we want to bring it back to real world. You already got your cuts, people. If you're waiting, when you get those headlines next week saying the Fed cut the rate a quarter point or even a half point, they're saying in this article on Market Watch that we've already got the Fed cut rate built in.
Right.
And the last time, and they said if the Fed cuts the rate a half a point, we may go through that same cycle we did last year where this rate right now is the lowest we're going to get. And if the Fed cuts a half a point, it might start edging up again. Now, it might not shoot up, but it
the
could
difference,
edge up again.
last year they were expecting a quarter and they came out with a half. So now everyone's expecting a half. I don't think it's going to be 3/4. So maybe it's like, okay, they did.
Oh, do you think? I didn't catch that. Do you think most people are a half now, Mike? Because I thought it was conventional wisdom was a quarter.
I've heard a half.
Oh, you've heard half
from
a lot?
Experts.
Okay.
Now, do I,
Yeah, do you
what do I
believe
take
that?
from that?
Right.
I can tell you this much. I mean, Johnny, is it a coincidence that we've gone down almost a half a point in the last 2 months? Is that a coinkydink?
I would say it's very possible that it could be a coincidence.
Yeah, right. Could also just be like summertime.
It feels very
summer.
Feels very likely that the industry's just paid attention.
So to your point, Jim, like if you're waiting for the Fed to do their thing, well, you missed the boat, right? We've talked about this. Like if you're waiting for rates to get better, and that's like in your mind, hey, rates got to get better. You might have some benchmark. Maybe you're not even there. Maybe 6.5 or 6.25 isn't that. Maybe you need to be 4 or something, right? But that's fine. But if you've been waiting, kind of waiting in the wings for the stars to align, where you need rates to get a little bit better, you need prices to get a little bit more, in your favor, you need negotiation. Like right now, you're on the leading edge of that because it's possible.
You've already been that for 4 weeks.
You've already got the half a point movement that you were hoping for.
Yeah.
Right here. Now is the time to do that. Next week, if anything, we could see it stay flat, but it ain't going down another half a point. We're not going to be at 5.75 2 weeks from now, right? Well, I wouldn't predict that.
No,
I wouldn't feel comfortable.
No. If that happens, that's what that's the other thing I want to tell people. When people say they want to be under 5 or something, the first thing I say to them, oh, you want a COVID economy.
Oh.
Right? Because that's why we went down to those super low rates in the 3s and even the 2s, right?
You might want a COVID economy if you are, you got a lot of equity, you're ready to transition to retirement or to like make that move, and you want to sell high and then take your money and buy low and downsize with it.
But what I'm saying is the country has to be in an economic crisis to get down to those levels again. So that's what you're hoping for if you're asking for those super low rates and not reasonable rates. And rates have gotten more reasonable. The prices have gotten softer. And the sellers have gotten more motivated.
The sellers have gotten softer.
The prices have got the sales have got the prices have gotten softer, and the sellers have become more motivated in general.
Yeah.
And also, what we've seen is here's another trend I wanted to bring up. You know how we've been looking at all the properties for sale and the MLS, and we started out in the mid to high 40s, and we got all the way up to 62 or 65,000. We're at 57,000 now. So what that means is it isn't that we've had a tremendous amount of sales because sales are still slow. We're down about 25% from the average normal sales. But what's happened is all the unmotivated sellers, or a lot of them, have pulled out of the market and said, if I can't get what I want for my house, I'm not selling it.
Right.
Yeah.
So now we have more serious sellers out there, like a more concentrated pool of serious sellers, right? So this is the perfect storm for buyers to come in and get what they want, unless you're waiting for a crisis where you see house pricing tumble 25% or something, right? But if something like that were to happen, or if we get our interest rates into low 5s or even high 4s, it's because a lot of people are unemployed, guys. And you won't be able to buy the house. There'll be so many people unemployed. A lot of those people that are waiting, they might become
squatters,
part of the unemployed group, and not be able to buy anything.
That home that's been for sale for 6 months, all of a sudden has squatters.
I'll
tell you what, Jim, we talk about it all the time. What you're waiting for, guys, is a payment that works.
Right.
A budget.
So don't try to outsmart yourself.
Those stars may be aligning. That's the whole point. They may not be. You might still just be blown out of the water as far as prices and where your payment's going to land. And that's okay. As long as you know that. As long as you know, Johnny, you come to me, you say, Mike, I got to be at $2,800 a month, no more than that, or whatever your number is. And we say, yes, that's fine. You can do that. Now you not sit back, but you're kind of leaning back, watching. And you're looking at certain things, and you're looking at neighborhoods, and you're looking at price points, and you're looking at a payment estimator that's accurate.
Mm-hmm.
Those stars might be aligning, and it might be nowish.
Right.
versus next month, for example.
But
right?
you won't know that unless
unless
you have access to that information. Those numbers,
you kind of got to do some setup.
That's it.
You got to do some staging.
And here's another indicator that things could turn against the buyers, right? That people aren't noticing. I read a report yesterday. I'm sure it came out a lot of places. We had the biggest surge of home buyer applications last week compared to like the last 2 years or something. It was like or a long time. Maybe not 2 years. Well,
I didn't see that.
And I'm like,
on my like personal level or even the branch level. I don't think I saw that.
Hey, that's what I wanted to say. Where are all the buyers for
Right.
Florida Talk Real Estate?
Sure.
I'm not. We put out so many emails over the last several weeks telling buyers, look, you got to give us a call if you're thinking about it. It's crickets chirping, right? Where are all the buyers? Because I'm not seeing the people going to me, hey, it's time for me to buy a house. Anyway, I'm a little frustrated about that because I'm seeing the national business. Like, wait a second, why am I being left out right now?
It might be in the states where people feel like that's where they want to be. And I don't know that Florida quite holds that clout anymore. It just doesn't. It's not the state that everybody's going to anymore. It's Texas, it's Tennessee. You know what I mean? It's the Carolinas still.
It's also like schools back in. We have these normal like seasonal cycles, right? It's a little bit different in Florida because we don't have the extreme changes, but it's like normal that the end of summer things slow down. Like that's just normal. Jim, am I wrong about that? Like things slow down.
Yeah, but if the rest of the nation is having a huge surge and we're not getting any, or I shouldn't say we're not getting anything, but I'm really surprised that our listeners and our demographic, they're not picking up the phone and saying it's time for me to do something.
I'm so desensitized to the headlines, right? Like the headlines are
I know.
It's so chasing the lead or whatever they call that. Like it's just late.
But let me explain what could be happening for buyers that might get them to say, okay, I got to do it now, right? You have shrinking inventory. That's not good for buyers in general, right? Because that turns into more of a seller's market.
Yeah,
right?
but we're still
we also have
market, right?
Yes, we're still in a buyer's market, but we have shrinking inventory. The indicators are right now shrinking inventory, which has been happening for months. And now we have surge of buyers coming through for applications.
Because rates are going to
So now what's going to happen? You're going to have a lot of buyers looking at less properties. And now it isn't going to be like it is today, where you can negotiate as good as you can today. If the house is hot, you're going to be competing with people again. And we haven't had that in a very long time.
I just think you have to be like, if you want to win, right? You talked about that. People want to win. You can't not be prepared, right? You have to do some minimal prep if you want to be able to find the right thing and get a good deal on it, right? Where the setup here is that you are a buyer, meaning you're ready. You've at a point in your life where like buying your house, this next house, whatever it is, makes sense. Now you're just waiting for those conditions to be right, so you feel good about the deal that you're getting. You don't want to be like pressured into it. Like you've got some time, you can be patient. Well, get yourself set up so that you can take advantage when it hits. Like this, what we're talking about, if rates come down, the natural is inventory is going to decrease, right? Like rates come down, buyers come out, especially buyers who have been waiting. They come out, more buyers, less inventory. You're not going to be able to get what you want on the price of the home, the negotiations with the sellers. So yeah, you might have won on the rate, but you might have lost on price, essentially, right? So you can't. There's no way to be that winner unless you've done the prep work, the groundwork. Put yourself in a position where you can pull the trigger when the opportunity presents itself.
Facts.
Yeah.
877-927-6969. Plenty of time remaining on this Saturday, about 23 minutes or so. If you'd like to be a part of the conversation, if you have a question, a comment, a concern about the conversation, don't be shy. Still plenty of time remaining. Of course, if you're not comfortable on the radio, always remember FloridaTalkRealEstate.com, your one-stop real estate shop. All the pros in one place, FloridaTalkRealEstate.com.
Thank you, Johnny. I figured we just mess around a little bit on the MLS just to have a little bit of fun today. So we had 57
certain definitions of fun.
Yeah, right. Real estate
mess
fun.
around on the MLS, guys.
Sounds like good.
MLS party.
We had
party like an MLS party.
we have 57,000 homes for sale in the general MLS. Now, there are homes like in Jacksonville and out of the country and stuff that are like sprinkled into this thing. So I wanted to narrow down. So out of the 57,000, 12,000 of them are in Palm Beach County. Now, not single family homes, all homes, right? So now I'm going to go into single family homes in Palm Beach County. Hold on here one second. And out of those 12,000, only 4,800 are single family homes. So we have 4,898 single family homes available for sale in Palm Beach County right now. I'm just picking that county.
So
right?
the rest is
Condos, townhomes, mobile homes, land. Could be all of that.
Townhomes is not in that.
I would
Single
consider
family.
that
I said single family. No, townhome is a separate category.
Okay.
Villa. So the categories are villa, single family, townhome, condo, mobile home, manufactured home is one category. And then I think land. I think those are the 5 all categories. They don't really have commercial.
By land.
Right. They don't really have commercial in there that much. Okay. So out of the 48,000 homes, I'm just curious, what's the cheapest Palm Beach County home for sale right now? I thought that would be just
the cheapest.
interesting. Yeah, the lowest price home in Palm Beach County right now.
39,000.
Yeah, I was gonna say there's some sweetheart in the Glade.
Yeah,
it's $72,000.
Okay.
I'll say because I'm thinking along those same no condos, right?
Just single family homes
Just
for this category, right?
And is that mobile home too? Because that's
nope, just single family.
Just single family.
Yep.
Okay, so I'll say 200,000.
Okay,
Whoa.
so Johnny, you get an A for that, 70,000, not 72.
Really?
Yeah,
Oh, no, he went over
70,000.
No, he went over.
It was
Yeah, I did
he
overshot it.
did go over, but
I mean,
still that's
everybody knows
pretty
that rule.
pretty good. So,
So I
70
win, is what you're saying.
70,000. It's an
That's right.
800 square foot 1945 wood frame home. 800 square feet, 1 bedroom, 1 bath.
Where
It's
is
in
it?
Belle Glade.
It is in the Glade.
Yeah, $70,000, and they're saying that it's good for a fixer-upper or just tear it down and build something new.
Is that
on
the one
property.
that's built on the sinkhole?
Yeah, exactly, right. But it is.
Yeah,
It's
that's
funny. It
creepy.
is lifted. Those old houses because
Oh,
there's so much
on
muck out
stilts?
there. So it's on stilts. It's only up it's a couple cinder blocks high, but it's lifted so it's total wood floor joists and you can crawl underneath.
Huh, cool.
And the reason why they build a lot of those houses out there because the muck out there is so great for sugarcane and everything.
Yeah.
It's not good for building
Right.
because it isn't very.
So just
strong.
every few years, you jack up the house and put another layer
Yeah,
of cinder
right,
block.
yeah,
level in.
exactly.
Yeah, level it out.
You go get your car jack.
Timothy, you
move it up.
seem excited about that price point.
Yeah, I was going to say.
Still Palm Beach
So-
County too.
So here's
That's wild.
here's
70
kind of
Gs.
something interesting question though. So what do you think the second lowest price would be? If 70 is the lowest and there's 4,800 homes for sale, what do you think the second lowest price would be?
70,001.
One,
I'm
I
gonna do a
started
little
at
Price is
39.
Right,
Now I'm going
yeah.
to say 139.
Okay. what do you-
Oh, you suck.
Yeah,
I was
yeah.
going 140.
Well, do
One,
it.
132.
Well, you guys are good that you jumped a lot higher than the 70 because it wasn't like 70,001. It's 105,000.
Okay.
Okay. So this 105,000 home is on H Street in Lake Worth. It's a 1 bedroom, 1 bath, 860 square feet. It was built in 1925. Right.
Wow.
So the house is 100 years
100
old.
years old.
It's boarded up. So they don't have any pictures on the inside. It's only been on the market 3 days. If you're interested in a $105,000 home it's in downtown Lake
I was going to
Worth.
say location.
It smells like George Burns.
Smells like Airbnb to me.
This one's actually is pretty close to Federal, not Dixie. It's close to Federal, which is a little farther east than I would expect. But anyway, anyway, that the 105, and then after that, then it becomes like and here's the next thing. The third.
How long has that house been on the market?
This one's good question. This one's been on market. Let me change the view. This one's been on the market. Hold on, just bear with me.
FloridaTalkRealEstate.com.
Thank you,
Your
Johnny.
one-stop real estate shop.
This
On
one
Facebook,
has
on YouTube.
been. Wait, it changed
It's
everything.
Florida
Hold
Talk
on.
Real Estate on Facebook.
Sorry,
Florida Talk
it
Real Estate
changed
LLC
everything.
on
It
YouTube.
says days on market, Jim.
No, they changed all the.
You don't have to
okay.
vocalize the navigation.
3. It's only been on the
It's
market. No, yeah, that one's only been on the market 3 days. The Belle Glade's been on the market 117.
Okay.
Okay. Now, the third one, and this is a very good lesson for sellers. The third lowest price home in Palm Beach County for single family is a property that's a condo. So they have it listed as a single family home, but it's a condo, and it's not. It's a real condo. It's in a
condo
a
community.
very well known 55 and over community. This can't be more of a condo than this condo, right? They have it listed wrong. So what does that mean? This poor seller, how long has this been on the market? This poor seller has been on the market 135 days. Okay. And they have it down as a single family home. So anybody looking for a single family home is finding this property, but anybody looking for a condo at this price in this neighborhood is not finding this property.
Nope.
So this property is not on the MLS for this seller.
Is that
this
somebody,
happens
do you reach out to them?
This happens quite frequently. Realtors, a lot of realtors right now are super green because a lot of realtors left because of the bad economy. And there's a lot of brand new realtors out there who are very green realtors. And they're making mistakes like this all the time. Do you know how mad I would be if I were the seller?
Do you recognize the listing agent?
I only found it. No,
Century Village is highly desirable in a lot of eyes too.
Oh, you know what? Let's go ahead and.
You said that, but he never said Century.
Let's go ahead and do this.
Oh,
you know,
is that your listing, Johnny?
Century Village.
You know what I'm going to do?
But he said condo.
Isn't Century Village?
It even says condo.
When Jim says there's nothing more condo than this condo, I'm thinking like
Century Village.
No, Century Village, Kings Point. That's what I'm thinking.
I'm thinking a building on the beach.
Oh, like, so when I think Palm Beach County epitome of like condo living, I think Century Village for 55 plus. He said 55 plus though.
Yeah. All right.
Yeah. So this person, I'm not going to bring up names and I'm not bringing up properties because I'm not trying to be bad to somebody, but I'm being real here.
What's the first name and last
name? Yeah.
What's the address? That's fine.
Hold on, I'm just scanning for him because he's got a very common name almost there.
There might be a reason.
877.
How do you stand out from the crowd? You make a huge mistake in your listing.
Yeah. Right? Well, you definitely. That's the opposite, I think.
See, but Century Village is a little funky because they are kind of single family homes. Like if you think about them, right? They're not like in a building, people above you, people below you, people on the sides.
This agent,
There's people above and below.
This agent is in
floor, aren't they?
I don't know. Is that Century Village a 2-floor unit? Most of those units? I thought it was single family. Like
no, they're all flats. Yeah, nobody. They're in multi-story buildings. They're all just like regular condos, just like your mom.
You're right then.
Just like your mom's place, but 6,000 units in the community.
That's why I'm the loan.
I only know that they went 2-story. They go higher than 2-story.
Some of them go 3.
Okay, I only know them at 2.
So, this person, I have to give this person credit. They're in production. They have
retirement.
They have they're definitely in production, this agent, but they have 3 closings and they've got 17 listings and days on market. It's all over the place. I can't complain because my days on market haven't been great either lately. So, it's part of the market.
It's the market.
But this guy made a big mistake. Of course, I'm going to reach out to him, let him know, hey, you made a big mistake, and trying to let him know.
That's awesome.
But a lot of people don't do that.
He can blame his people.
It could just be he's busy.
He might have his Nancy who never makes mistakes.
But I see this stuff all the time. Like you see this stuff all the time. Now, just out of curiosity, we're going to go flip side now. Just bear with me. We're going to go most expensive house in Palm Beach County.
Oh,
we're going to go completely opposite. So we're going from $70,000 in Belglade
all the way to the island.
Yep, all the way. So
can I ask you, Jim, just real quick before you get that, is it a good strategy? So instead of like sitting down with you and like figuring out bedrooms, bathrooms, and townhome, can I just go in and just sort it like descending and I just start at the very cheapest and then work my way to find the home that I want?
That's how I usually do it. When I'm doing investment, I set up my search and I start off with the cheapest home and then I go up, right? So that's how I do it. A buyer should do that too if they know exactly what they want. Or if you're not sure what you want, to get a flavor, start at, let's say
I need 3 bedrooms, 2 bathrooms, at least put that in there.
So let's say somebody's looking for a 3-bedroom, 2-bath in Wellington and they want to pay $500. I'm just making up, which is a little bit lower price point for Wellington, right? It's there's still a lot of properties for sale in Wellington at $500. But let's say that's what you're looking for. What I would do if I were doing the search, Mike, is I would not go from put it from 400, 400 or more, and then cap it at 500, right? Yeah. What I would do is 500 or less. because you might end up finding a deal at 385 that you totally are in love with that needs fixing up and you're willing to do it for that home at that property in that neighborhood because it's just perfect for you. It's like, I'll go ahead and do the fixing up as opposed to looking for the more ready to go house that's closer to your $500,000 budget. And you would never see that 385 home if you didn't bring it down to zero.
You could also top it out at like 550. Just like what happens if there's that 518 property?
Well,
you don't want to miss
very
that.
Very good thing. So if you give me somebody that's qualified for 500, what I normally do in today's market is set the search up for 550. Not because I'm trying to get the buyer to upsell, but because 550, we might be able to get it to 500 in the negotiation.
It's been on the market for 120 days.
But in a hot market, if you're good for 500 and we're in that COVID frenzied market thing, if you're good for 500, I'm not putting the search above 500 because at 500, you're probably paying 510, 515, 525 in that market. So I'll set it at 500 and we're hoping that you can get it for that. Really, you're going to probably buy a property for 475 and offer 500 in a top market, which just shows you the difference. This is real life difference of what we were just talking about in that last segment.
Right.
You know what I mean? Real life example. So which city, I'm going to ask you price first. What's the most expensive home for sale in Palm Beach County right now?
It's got to be on Jupiter Island.
Oh yeah, but how much first? I changed my mind. How much? What do you think is the price?
139 million.
Okay.
Ooh, how much was that one that sold last year on
it's 180 something.
It was 180 something.
Is that right?
Something like that. Yeah.
Million.
Currently.
Not thousand. Yeah.
But this is currently for sale.
Currently for sale.
I'm going to say 10 million, but I'm probably
10 million?
I'll go 120 million.
120?
Really?
Nah. 285 million.
Oh, Jesus. 100 million.
285.
The record sale last year. That was a record sale last year. 100 and
now
what
city is it in?
That same one, Tarpon Springs or whatever it is. That same island.
I was going to say Jupiter Island. I don't know if that's a city or not.
Yeah, that I don't know each individual.
I thought most people, if you ask them, I think regular people, everybody says Palm Beach, right? Because they think of Mar-a-Lago, and it is super rich over there, right? But Manalapan. And Manalapan is, I think it might be more, I think the highest per capita income or per capita house is Jupiter Isles, not Palm Beach or Manalapan.
Yeah. But
Manalapan might be changing. I think that's
south of Palm Beach Island.
Yes,
Jupiter
it's
Island
south
is
of
north
Palm
of
Beach
Palm
line.
Island.
Yes. Right. So Manalapan. So this house is a 50,000 square foot home.
That's it.
It's 285 million.
Bowling alley.
And it's been on the market 240 days. Now, what
how much beach erosion does it have?
All right. What would be the number 2 home? Just like we did 70 to 105, right? What is the second most expensive home in the county right now?
Well, it's got to be somebody keeping up with the Joneses. So I'm going to say 189.
255.
190.
150. So the first questions you had,
would have been
you guys were closer with the second highest price. And what city is it in?
That one's got to be Palm Beach Island.
Royal Palm Beach.
This one's in Manalapan, and it's right down the road from the other one, and they both went on the market within 20 days, so they're definitely competing with each other.
But they've been on the market a year.
But the 50, they've been on the market 9 months for sure. And the 50,000 one, the 150, you're slumming it at 29,845 square feet. And by the way, that's living square feet, not under roof. Okay. Under roof, the second biggest house, the 29,000 is really 35,000 under roof. Right.
What is the monthly cost on a $200 million
for
estate?
taxes?
No, just like maintenance. What do you got to pay every month?
Oh, I have no
Forget
idea.
about your mortgage. Just to own it.
I don't know if I could afford the electric bill.
No,
I know, right? Yeah. I wonder. Let's see what the taxes are. Okay, let's just see what the taxes are. So the 2024 taxes were only $394,018.
Oh, that's not bad.
That's it, $394. Right? Divide that by 12. What's that by 12, Mike? 400 divided by 12.
We should totally eliminate
That's like
property
what,
taxes. We don't
25?
need any
It's
of
like
that.
That's like 3,500,
3,400,
34,000 a
a
month.
month.
That's one house.
Yeah.
One house. Think of the money they make in property taxes.
Isn't that
Good
crazy?
Lord.
So now the thing that's kind of interesting, the third most expensive home on the market right now has been on the market 212 days. It's right down the road from all these. So all these three went on the market at the same time. Now this one's only 18,000 square feet under air, and they're only asking 87 million. So look at the top three: 285, 150, and then it drops to 87. And then once you hit 87, then it starts clustering.
It seems like a conspiracy over there on Manalapan. They're trying to get appraised values up for the neighborhood. That's what's happening. They're like, look, there's no sales, but look at these active listings, right?
So,
these active listings per price per square foot.
So for 20 million or more, how many homes in Palm Beach County are for sale that are 20 million or more? So we know the top is 285. If you go all the way down to 20, how many homes? We have 5,000 homes for sale in the county.
Jeez. I would say less than 100.
You're right, Mike. 86. 86 homes are 20 million or more. Actually 87, 20 million or more.
Yeah.
Right? So anyway, kind of interesting. It's like life of two worlds. Belglade, $70,000, right? And Manalapan, 285 million, right? You got to love the country we're in. It's like,
and
so
those
crazy,
two people
right?
could cross each other driving on a road.
They're 30 miles away from each other, right? They're 30 minute drive away from each other, right? Pretty crazy, right?
Crazy.
Isn't that crazy? So, just to give just to give you an idea, there, the cheap homes in the county, most of them are super ancient. They're fixer-uppers. Sometimes they're tear-downs, things like that. So you have to keep that in mind. And also, sometimes the neighborhoods are super high crime. Right? So you have to worry about that too. Sometimes on the lower price homes.
I want to bring up something that's totally different from the topic you're talking about, highest, lowest price on the MLS, just because we're really short on time here. And if you don't mind, I'll squeeze this in.
Yeah, please.
I found it really interesting. And I'm always curious to see how the dominoes fall and what the effects are when things happen.
Mm-hmm.
So as we got into COVID, you started to see the products, everything, things we were looking for go up because of the supply chain. It was, and then things have settled in. The supply chain's well back. It's healthy again. Now we're falling into like the uncertainty of effects of tariffs and et cetera. But I did see that building supplies, wood in particular, lumber in particular, is starting to not just come down a little bit, like massively come down. That in a moment becomes an interesting component for new construction, because if it costs a lot less to build a new home, doesn't that put pressure on the existing homes? Like, isn't there going to be a cause and effect? If you can get your new home built considerably cheaper, why am I going to buy this 20-year-old house for what you're asking?
That's happening right now. It's happening right this second. So Port St. Lucie,
but considerably cheaper. So as the cost of lumber gets slashed.
Well,
now I'm not even paying for what you're asking on this home you just built, because you can build me a new one cheaper because I know what your lumber costs now.
Well, the thing is that I don't know where you're getting your information. I'm not saying you're wrong.
But consuming through the last few days.
I just listened to the Prime Minister of Canada, and they give us 25% of all the lumber we use, most of it for housing, and they cut us off completely. We're losing 28 million cubic feet of wood from Canada.
So that's a variable.
What also Canada supplies?
That's a variable.
Roofing.
That's a variable that was not included in the stats about lumber cost that I consumed.
Okay.
So the reality is lumber's cheaper, but we may not have access to it in the rate that we want, because we may have some.
I think prices, if it is cheaper, it's going to go up because we have to fill the void. We're going to lose 25% of our inventory, so it's a supply demand thing.
There also may be construction materials that aren't wood.
Roofing materials. Right. They might have to switch to that. You might have to switch. Well, that happened in the COVID thing. They couldn't get impact sliding glass doors. So they just started They just started putting in French doors. Did that happen to you?
Or they were no, it didn't happen to us. But I remember we've talked about it on the show, or we also read about it in articles that they were selling homes without the slider even on the house.
Just block it in.
Yeah, and we'll come back when we get the material. We'll come back and install it. I mean, I remember talking about that.
At one point, you could get the sliders, but not the handles for the slider, and they were stuck. The builders were stuck.
Yeah.
So then finally, they just swapped them out to French doors, and maybe they did what Jimmy said.
But I think to Johnny's
things like
point,
that, they were coming up with creative ways. Well, we got to get the sale through. We don't want to sit on this until we get the material in, which could have been months.
Right. And Canada is also a big supplier for roofing materials. I think more shingles than like roofing, like tiles. So that's another big hit to us. That's going to be a shock to the builders. I'm thinking the builders look very down right now. So
which could be an opportunity. So I guess to Johnny's point, if you are a buyer and new construction homes are generally in your price zone, it's worth looking at, because there may be deals.
Absolutely. That's why Jimmy did what he did. That's a really smart move. If you can afford the new home and you're okay with either being in a planned community, doesn't have to be gated. Some people don't like that, but Jimmy didn't. He bought a brand new home, brand new construction in a single lot, and he has no HOA fee. The builder came in and built the home on the lot. So there are a lot of opportunities out there for that, and especially if you're older, you really should look at new construction versus resale.
Why is that?
Because let's say you buy a house at 65 or something, right? And maybe your income's going to change the next few years because you're retiring, and you have a roof that's 10 years old when you buy it.
So your long-term capital expenses are further down the line.
New AC, new water heater, new roof. You want to be careful about those kind of things.
Although they don't make them like they used to, Jim.
No, they don't.
AC's going out every 5 years. Like appliances.
Jeez, they don't make them like they used to.
They sure don't.
Jeez.
I've had some expenses that I really wasn't expecting.
Yeah.
Refrigerator, air conditioning.
You've had to replace your
Not
AC?
replace them, but I've had to
At
repair
your
them.
new house?
Yes.
Oh, I want to talk to you about that.
And your
That's
fridge
very
too? What
interesting.
happened? What happened with the fridge?
Your fridge?
The ice maker. Believe it or not.
Oh, yeah.
Yep.
That's kind of more of a common thing.
And guess how much?
About
To
300 to 500.
500.
Yep, because that happened to me.
$500?
But was it under
$500
warranty?
repair. No, because it was over a year.
You know how many ice trays you could have bought for $500?
Exactly.
Or bags of ice?
Exactly.
Or you just cut back on margarita weekend. You don't have to add so much ice.
No, hey, now you're talking crazy.
You're going way
Yeah, you're crazy.
You can cut back on margarita weekend. Thank you very much for being with us on a Saturday. Always great to know you're out there. Remember, Florida Talk Real Estate is a team of pros, and they are there for you when you're buying a home, selling a home, stuck with a home, you don't know what to do. If you need a professional that touches the world of real estate, I got one for you. The one-stop real estate shop. It's floridatalkrealestate.com. On Facebook, on YouTube. Consume away. Share as well, because you can change lives with the pros at floridatalkrealestate.com. Like Mike Rao, the mortgage guy from the mortgage firm. Have a great weekend, my friend.
Thank you. Thanks, everybody.
Like Jimmy D over here, Jim DePolo with the Florida Home Pros team. I hope you have a great weekend as well.
Thank you, sir.
Timothy, have an awesome weekend, my friend.
You as well, Johnny, Mike, Jim. Have a great weekend, and thank you for listening.
Enjoy the margarita weekend. I hope that ice is cold.
Hell yeah.
Yeah, buddy.
Yep.
And thank you for being with us. I saw Joe